Welcome to our channel. We're embarking on quite a fascinating deep dive today. We're unpacking a topic that's, well, it's been making headlines and sparking a lot of debate. It's the real story behind China's economic performance in the first half of this year. You've sent us a stack of compelling sources, some official economic briefings, and a couple of really interesting online discussions that highlight just how different the narratives are out there.
It is an intriguing challenge, isn't it? Our mission here is really to, cut through the noise, look at the actual data, and try to understand why there's such a stark difference in how these numbers get reported and interpreted. We'll look at the specific figures, the driving forces behind them, and what this all means for the global economic landscape. So what's jumping out at you right from the start as we look at this material?
Okay, yeah, let's unpack this. The first thing, honestly, that jumped out was this big discrepancy. On one hand, you have these official reports from China detailing, significant growth, but then you see headlines from major outlets like Reuters painting a very, very different picture. Specifically, one Reuters headline we're looking at reads, "China's economy slows as consumer tightens belts, U.S. tariff risks mound."
Yeah.
And what's really remarkable is this apparently came from their Beijing correspondent,
Right.
who was reportedly at the press conference hearing the same numbers we're about to discuss.
It really makes you wonder, doesn't it, how the narrative can diverge so sharply from the reported data. I mean, the Reuters summary itself mentions China's Q2 GDP growing by 5.2% and being 4% above a 5.1% forecast. So this raises a really important question. How can economic growth that actually beats expectations be framed as slowing? For, some experts looking at this, it seems, patently nonsensical.
Right. So if that headline doesn't quite add up, what are those beautiful data points, as one source called them, that sparked such a strong reaction? Let's get into the actual numbers reported for the first half of this year.
Okay, the preliminary estimates are, frankly, quite robust. Let's start with GDP growth. It was 5.3% year on year, and importantly, that's at constant prices.
So adjusted for inflation.
Exactly, which notably beat China's own full-year target of 5%, and the breakdown was 5.4% in Q1 and 5.2% in Q2. Pretty consistent.
Okay. What about trade? That's always a big one.
Right. Foreign trade in goods increased by 2.7%, hitting a record high. And exports, despite, all the talk of global difficulties, exports actually soared by over 7%, 7.2% overall.
Wow, over 7%.
Yeah. And interestingly, China's trade with 190 countries and regions around the world has been growing. So trade with almost every economy is up except, notably,
The United States.
The United States. We'll probably come back to that.
Definitely. And inside China? Industry, services?
Yeah, strong performance there, too. Large industrial enterprises grew by 6.4%. Manufacturing was up 7%. Equipment manufacturing up a really strong 10.2%. And high-tech manufacturing up 9.5%.
That high-tech number seems significant.
It is, and mirrored in services, too. The value added of the service sector went up 5.5%. But look at this. Information transmission, software, and IT services increased by 11.1%. Huge jump.
Okay, so industry and services are looking solid. What about the consumer? The Reuters headline mentioned belt tightening.
Well, the data shows total retail sales of consumer goods reached over 24.5 trillion yuan, up by 5%. And online sales, which are huge in China, were up 8.5%. Service retail sales grew by 5.3%.
So not exactly belt tightening across the board then.
It doesn't look like it from these aggregate numbers. And just quickly on other indicators, the urban surveyed unemployment rate averaged 5.2% for the first half, dropping to 5% in June.
Which is relatively low.
Yes. And household income. Per capita disposable income increased by 5.3% nominally, 5.4% in real terms. Interestingly, rural households saw income growth outpacing urban households, 5.9% versus 4.7%.
Okay. And one last, perhaps unusual data point from the sources, the work ethic.
Yes. The average Chinese employee worked 48.5 hours per week.
48.5 hours.
Quite a bit of work going on.
It really looks like a picture of, steady improvement and resilience, doesn't it? Based purely on these numbers.
It does. And if we connect this to the bigger picture, this growth, it wasn't accidental. It was driven by several key factors and strategic shifts.
Right. So what were those drivers?
Well, first and foremost, domestic demand was the engine. Domestic final consumption expenditure alone accounted for 52% of GDP growth. That's the primary role right there.
And that was supported by specific policies.
Exactly. Policies supporting this included things like equipment upgrades and trade-ins of old consumer goods. These apparently generated about 1.1 trillion yuan in sales and involved around 175 million consumer subsidies. So Real stimulus.
Okay, so domestic demand is key. What else?
There's also a noticeable shift towards high-quality exports. Chinese exports are increasingly growing in high-tech products, things impacting sustainability, green fields, innovation.
It's not just cheap stuff anymore.
Precisely. It indicates a jump in quality and a different positioning of the country in the global supply chain.
Yeah, interesting. And the private sector's role?
Hugely dynamic. By the end of May, the number of registered private enterprises in China surpassed 55 million.
55 million.
Yep, that's a 40% increase just since 2020. And these firms are critical. They create over 80% of new urban jobs.
Wow.
And finally, there are these strategic adaptations. China has been implementing counter-cyclical macro policies.
This is smooth out the bumps.
Right. And focusing on this dual circulation economy idea, strengthening the internal circulation to make it more robust against, say, external shocks. This strategic plan is clearly having a significant impact, allowing China to adapt pretty robustly to external constraints.
Okay, this brings us back to that really intriguing question. We've just laid out all these positive figures as strategic adaptation. So why the persistent narrative, especially from some Western outlets, of a slowing or even collapsing Chinese economy?
Exactly. What factors might be driving, journalists or editors to come up with headlines like the Reuters one? Some experts we look at suggest it's maybe a very traditional Western description of Chinese things, possibly stemming from a sense of jealousy, perhaps, or an expectation that U.S. tariffs should have led to China's economic failure, and they're looking for evidence of that.
It sounds like what one expert called a tremendously active imagination, possibly running counter to the actual evidence. And there's a history here, isn't there? You mentioned this earlier. Persistent attempts over at least the last decade to run down the Chinese economy. Recycling these make-believe tropes, as the source put it, month after month, like slowing retail consumption, collapse in profitability, deflation fears, property cycle doom.
That's the perception highlighted by some analysts, yes. That the underlying attempt is to portray the Chinese economy as if it's constantly on the verge of crisis and collapse. Whether that's seen as, wishful thinking or perhaps an attempt to find justification for certain domestic policies back home, even if the results don't quite align.
Speaking of those external pressures and policies, the U.S. launched a second trade war, according to our sources. How has that actually affected China? And what's the broader picture of global trade relationships looking like now?
Well, the trade data between China and the U.S. definitely reflects a conscious American policy to reduce trade between the two. No question there. The overall value of trade between China and the U.S. dropped by 9.3% in the first half of 2025.
That's quite specific.
Yes. U.S. exports to China dropped 7.7%, and U.S. imports from China dropped by 10%.
Okay, so trade is down between them. What's the impact on the U.S. side, for example?
Well, experts suggest this policy is leading to increasing price pressures in the United States. Also, the risk of product scarcity because of supply chain disruptions, and just generally a rising cost structure for American households and industries.
Which isn't exactly rejuvenating American industry, presumably.
These outcomes seem quite far from that stated ambition based on the analyses we reviewed.
And the impact of the tariffs on China itself
seems to have been grossly exaggerated, according to one source. Remember, U.S. exports only account for about 3% of China's GDP in terms of goods. It's not insignificant, but perhaps not crippling either.
Right.
China's economic system, as we discussed with dual circulation, has adapted pretty robustly. They've compensated through growing domestic demand and actively expanding into alternative markets.
So the U.S. isn't the only game in town anymore?
Not at all. The U.S. economy is simply not as dominant in global trade as it once was. China has become the largest trading partner for over 140 nations now. Over 140. And trade between China and other developed countries, think the European Union, Japan, South Korea, it's all gone up. Which really makes the United States the only dark spot, as one source put it, in China's overall trade growth picture.
That's quite a statement. It suggests that while tariffs definitely reshape supply chains, they didn't stop trade overall. Other countries seem keen to maintain and even expand their economic ties with China. We saw mentions of Italian and European businesses showing strong interest.
Absolutely. Interest in continued trade and innovation seems high from those quarters, regardless of the U.S. stance.
Okay, so as we start to wrap up this deep dive, let's turn our attention to the future. What's next for China's economy? The sources point to significant potential and some key strategic areas of focus moving forward.
Indeed. China is actively fostering what they call new quality productive forces. It's a key phrase. Think of it as a major strategic focus for achieving high-quality development, moving beyond just quantity.
So what does that look like in practice?
Well, innovation is central. R&D expenditure is now 2.7% of GDP.
Which is higher than the EU average.
Exceeding the EU average, yes. And the outcomes of this innovation are visible across the board, from AI like DeepSeek large models to robotics, aerospace, self-driving vehicles.
And those emerging industries we touched on earlier, high-tech.
They're thriving. High-tech manufacturing value added up 9.5%. High-tech services up nearly 10%. The digital economy's share in core GDP growth is already at 10%, which puts China among the leading developed countries in that space.
Why? And green development, that's a big global focus.
Huge growth there, too. New energy vehicles, EVs, grew by 30% in the first half. Lithium batteries up 40%. Solar panels up 53%.
Those are massive numbers.
They are. And it's not just new stuff. There's also a big push to upgrade traditional industries. Initiatives like Internet Plus, AI Plus, Digital Plus are accelerating that transformation.
Okay, impressive on the production and innovation side. But what about consumption? You said it was the backbone earlier. Is that momentum expected to continue?
Absolutely. Consumption continues to be crucial. Performance was strong in H1, and the expectation is that momentum will sustain in H2. We're seeing service consumption, retail sales for services speeding up. That shows an improvement in the structure of spending, not just the amount.
Okay.
Holiday consumption, like during major festivals, showed double-digit growth in tourism and cultural spending. And consumers are changing what they buy, increasingly focused on emotional fulfillment, experiences. Sports equipment sales were up 22%, for instance. And huge interest in green and smart consumption EVs, energy-efficient home appliances.
Right, you see that shift globally, too.
Definitely. And one more point on consumption. Tourism inflows. China introduced visa-free policies for more countries.
I saw that.
And it led to a big jump in international tourists, up over 70%, 72.7% during the May Day holiday alone.
That's a significant reopening effect.
It is. And fundamentally, with a growing middle class and domestic consumption making up over half of China's GDP now, there's just this huge internal appetite for goods and services. What's really telling, perhaps, is that international organizations are actually revising upward their growth estimates for China.
Even while
they estimate slower growth for most other major economies. It suggests a certain confidence externally in China's ability to maintain stability and pursue this high-quality development path, even with all the external uncertainties.
So let's bring it all together. What does this all mean for you listening to this? We've seen a pretty clear contrast, haven't we, between the reported economic data and certain media narratives. We've explored how China's economy seems to be driven by strong domestic demand, a strategic shift towards high-tech and green industries, and these really resilient trade relationships that span almost the entire globe, largely, it seems, bypassing the direct impact of the U.S. trade conflict in aggregate terms.
Yeah, this deep dive really reveals that economic performance, especially for a country as enormous and interconnected as China. It's a complex tapestry. It's not simple. And what's fascinating, or perhaps cautionary, is how much the interpretation of data can be shaped by pre-existing viewpoints or geopolitical factors. It really urges us all to look beyond just the headlines.
So as you reflect on this, maybe consider this question. If a nation's trade with over 190 countries is growing, its major industries are expanding, and its GDP is beating its own targets, what does slowing truly mean in the context of a dynamic, globalized economy? Is it just a matter of perspective, or is it perhaps a more strategic framing of information?
And maybe one final thought. If the average Chinese person is working 48.5 hours a week, contributing to this robust domestic economy and this push towards innovation, what does that tell us about the underlying potential for future growth, even when faced with significant external pressures like tariffs? We hope this deep dive helps you gain a more nuanced understanding of these really complex dynamics and hopefully encourages you to always question the narratives you encounter wherever they come from.